earnings come out recently. Microsoft, Tesla, Meta, some pretty strong earnings, and that the subject of today's call is actually going to be earnings. So we'll begin, as Matthew said, momentarily while he pulls us up. As always, ask as many questions as you'd like, but that's the topic today is earnings. And it's like earnings is a report card that when you're a kid that you show your parents, and the companies do the same thing. 4 times a year, they get a report card which they have to show to us unit holders. All right, the shareholders, because if you're a shareholder of Meta or Microsoft or Apple or any of these companies or Tesla that reported today, well, you want to know, how am I doing? How's the company that I've invested my hard-earned money into? How are they doing? So Matthew, I'll let you start.
Yeah, thanks, guys. So it is earnings season, and yeah, literally about an hour ago, there were some earnings from Tesla and Microsoft, and obviously a little
Can you
bit too
display
early
full?
to
Can you
digest
display
those.
Matthew? Can you display full screen? It's just showing.
Hold on a second. Let's stop this. Maybe share the other screen then. Let's
Again,
see.
guys, ask any questions you have on earnings. And there it is. That's perfect, man.
Yeah, all right. So, today's 29th of January. We had, as I was mentioning, we had Tesla and Microsoft earnings come out just about an hour ago. Obviously, a little bit too early to kind of digest those, but we do know that this is earnings season.
And Meta, Matthew, and Meta too. All three reported.
They reported today, yeah. So yeah, we'll be talking those at a later point. Generally in line, there were some misses, but generally in line as a kind of overarching executive summary there. But again, a little bit too early to completely digest those right now. But we are going to talk about earnings generally speaking. This is earnings season. That it comes around literally every companies required to report their earnings every 45 days after their period end. So like they have 4 period ends each of a quarter, and within 45 days after that period end, they were required to produce their earnings, right? And the last quarter, that is their annual. So you get the full year's worth, and that is also 45 days afterwards. Yes, Omar.
Matthew, I have a question for you. If I'm running one of these companies, and let's say somebody, because we know there are people who don't always play by the rules. What if one of these companies wanted to mislead investors and put some false, earnings there? Is there a mechanism to prevent that from happening?
Yeah, so I mean, listen, that's the whole. I mean, first of all, what you're tabling, it's pretty dire on many fronts, right? Like on
Yeah,
one
but it
front.
has happened before, i.e. Enron.
Yes. So has it happened before? Yes, but like literally 99.9% of the time, it does not happen.
Yes, that's
Right?
correct.
Like it's on in like, yeah, it does happen sometimes. No, it's not sometimes. It happens exceptionally rarely, right? Is it possible? Yes, but you're talking about, potentially collusion with management, collusion with auditors, internal, internal manipulation. It takes a lot. So yes, you can. It is possible. It has happened before, but like, let's not, there's a saying, when you hear rumblings, it's often horses, not zebras.
Right. So this is something that has occurred very rarely in the past, and there are safeguards in place because all these statements that we receive, these i.e. report cards, are audited by a big financial institution like a KPMG or an
Well,
EY, et cetera.
Well, let's just clarify that these are not financial institutions do not perform audits. Accounting firms and audit firms perform audits, right? That's point number one. And two, the requirement for an audit is an annual requirement. The interim periods, like every quarter, like Q1, Q2, Q3, you will notice sometimes that underneath a balance sheet or an income statement, it will have in parentheses, unaudited, because the requirement is for a year-end audit to happen. Now, oftentimes, you could do quote unquote a review, which is slightly less assurance. It's called, technically speaking, it's called negative assurance. That is also possible. But again, you're getting into a little bit of kind of audit assurance related details here. You could do a review, which is, basically the assurance firm says, we looked at certain stuff, we didn't find anything wrong. That's very, very crude analogy, but that's kind of what happens. But to answer your point, overall, yes, there are safeguards, and the safeguard is, one is there's a board of directors, there is, a C-suite there that takes responsibility for the statements and prepares the statements. There's an auditing firm which determines if the statements are fairly stated. So there are a number of controls in place that produce a framework whereby users of financial statements, and we are all users of financial statements, can rely on those financial statements, right? So the answer to the question is yes. And what does that create? Well, that creates a fair amount of liquidity, because like there's a reason why there's millions and millions of shares traded of these things, and there's not millions and millions of shares traded of small companies. And part of which is there's liquidity, right? And the process by which companies are audited and you have reliance on those statements, it does create some liquidity there. Otherwise, you'll be constantly saying, well, how do I know this? How do I know Microsoft didn't make 50 billion and made 45 billion, or what have you? Or like you need to rely on the information that you are provided, right? So yeah, if that's what we're referring to, hopefully that provides a little bit more discussion there.
I can add a couple of other comments. Typically in Canada and the United States, the CFO and the CEO have to attest to the veracity of the statements. And if it turns out that there were deliberate or negligent issues that were missed, those people generally get sued. So it becomes becomes very important for senior executives to make sure that the statements are accurate, or else they leave themselves and the company exposed to extraordinary lawsuits.
Yeah, it's pretty dire, and that's why these frauds and misstatements happen. Well, I shouldn't even say misstatements, because misstatements can happen, but these frauds happen very, very rarely, right? But like, listen, like there's 500 companies in the S&P 500 that are reporting 4 times a year. So it's 2,000 statements. Like there's a lot of work to be done there, right? Okay, so
Thank you.
No worries. Thank you for the question. And if you guys have questions around that kind of auditing process or what have you, like, please feel free to ask away. Okay, let's continue on here. But to Omar's point, like you do have a certain level of uncertainty, right? And that's sometimes what produces opportunity here. Because like prior to Microsoft and Tesla, etc., reporting earnings, literally an hour ago, we didn't know what they were, right? And that uncertainty, obviously increases volatility, creates some opportunity, because you don't know what's going on. And even the best analysts, they don't know for sure. They may come within a penny or two or hit the EPS target like dead on, but like it is not a given. So you do have an opportunity that lies in that uncertain event, right? Now, what is earnings season? Well, it kind of focuses on a few things, right? But like if you notice, revenue and earnings, like from a look back perspective, I would say there's literally 3 things which are kind of targeted. It's revenue, net income, and EPS, right? We've kind of mentioned that there. And when those are off, you kind of see in conjunction, okay, well, are margins the same? That type of thing. Lately, we've been looking a lot, like, last little while, especially with the Magnificent Seven, there's like, okay, what have you returned to shareholders? And, that your quote unquote return to shareholders is the combination of dividends and share buybacks, right? So you take a look at and see what that equals. And share buybacks, it's like a double whammy, right? Like it's like you first of all, you had enough financial discipline to purchase shares on the open market and make the float of shares that are available to be traded less. And then so you're kind of like, I would think, rewarded for that in a way. And then you're also rewarded by literally decreasing the denominator when you're calculating your EPS. Right. So it's a double whammy. I think, financial discipline is really, really important here. These giant companies that have, year over year and, decade over decade increase in dividends and whatnot, like, that's not luck, right? That's not luck. So certainly to be rewarded there. And I'll also say in the kind of AI space and capital intensive companies that are capital intensive, that capex spend is pretty important, right? And you can go back to kind of first principles of what the definition of an asset is, and you can say, well, the definition of an asset is something that you own will give you a future financial benefit, right? So you can say, listen, like, you're investing all this money to make this this great chip or this great cloud product or this great car in Tesla or this great robot in Tesla, et cetera, et cetera. I expect a future economic benefit for coming out. So like that's something, especially I would say within Magnificent Seven stocks or technology stocks, you want to see a bit of a capex spend, then a bit of an R&D expense too on the income side of the financial statements to say, okay, what are they spending money on? And how are we as shareholders going to be potentially rewarded from all this money they're spending on capex?
Yeah,
All right.
CapEx, guys, so what you want to look for in these earnings reports are 4 times a year forward guidance. So after the actual numbers come out, the financial statements come out, they'll have a call usually talking about where's the business going? What are we going to do in the future, right? And that's where the market will be judged, whether it's going to be, favorably or unfavorably. So for example, today there'll be earnings, Tesla guidance, there'll be Microsoft, there'll be Meta. You want to hear from the executives in that company what's happening. Because remember, the stock market's going to price in today what it thinks it's going to happen about 12 months from now. It's forward looking. But you also want to know, what is this company doing a year and a half from now, 2 years from now, 3 years from now? Are they spending capex properly? Meaning, are they spending money properly to acquire new business in the future? How are the margins looking? You made a bunch of money this quarter. Are you going to buy back some shares and reduce the number of float? Are you going to pay me more in dividends? But these are all things that you want to look for. And this kind of really guides the health of the company. Let's keep going, Matthew.
Yeah, so there's a few stats here. 80% of beaten analyst expectations, an average of 7.3%. Okay, well, that's nice, but just because you beat the expectation doesn't guarantee you an increase in stock price, right? Because if anything else was a little on the soft side, then you could be for example, if you beat earnings but your guidance was not so hot, well, then your stock might suffer the consequences, because obviously, like, you have your balance sheet, which is kind of your treasure chest and whatnot, but theoretically the value of the company is its future earnings, right? And if your future earnings, if the forecast is grim, you may, even though you beat earnings, you may not necessarily have an increase in stock price afterwards, right? But again, I'd focus on this fourth point that, a Magnificent Seven, 3 of which were already reported. That's going to be the focus. And literally tonight, you did see Tesla, Microsoft, and Meta all report. We'll get into that in future dates, guys. But again, Tesla, some good, some bad. Microsoft, some good, some bad. Microsoft is pretty good, but the guidance was a little softer. That's the general consensus there. But we look into Alphabet and Amazon both next week, and close out with Nvidia, which is interesting. Nvidia's placed at the very end because right now it's at the very center. So it kind of gives us time to kind of digest what's going on with this whole DeepSeek story, which is continually evolving, right? And we'll talk about that a little bit as well.
Matthew's a question right now. Maybe we can address it right now. Lorianne has thoughts on DeepSeek affecting NVIDIA and AMD. Perhaps, Mr. Jarvis, you'd like to take a stab at that.
Sure. So I think DeepSeek caught a few people by surprise. It wasn't too new. It was first released, I believe, on January 6th, and then it slowly ground its way through social media until all of a sudden it burst on the scene. And at first blush, what they're saying is that they've been able to replicate some sort of ChatGPT equivalent using significantly less money, cheaper chips, etc. And so that put a real touch of anxiety into the market, in the sense of, can you start building more ChatGPT type products for significantly less than what people have been expecting. So in that sense, NVIDIA, which has the highest, I guess, enthusiasm behind it, excuse me, I'm just recovering from a cold, has the highest um, set of highest expectations about future growth. This clearly had a deep impact. But the problem is that there's two types of signals that are being sent here. One is, okay, so there's other people who are competing in the AI space. Great. There may be cheaper models for the use of AI. Well, it turns out that not surprising. There's deep issues, or there's concerns about uh, how accurate the information is about Deep Six, that it may be just kind of mirroring and replicating, piggybacking, and using information that comes from ChatGPT. They don't have the infrastructure to support it. I believe that there's been crashes. They don't have the server farms. And in order to actually create something that is as useful as ChatGPT, because ChatGPT had the same problems when it started to take off, they could not spend enough money to build the server farms to support the activity. Guess what? It may turn out, and especially, sorry, I'm going to say it, comes from China, and there's a little bit of suspect about the quality of the information that comes from there. Yes, there was an immediate sell-off because, oh my goodness, we don't have to spend top dollar to get all of these chips. But it's also, you've seen a recovery, a pretty solid recovery since then. So the big issue is really, and this is going to be very interesting to see what happens in the guidance that comes out at the end of the month. Is there an erosion of the preeminence of NVIDIA through some of these other systems? And it's not clear that what DeepSeek really represents and how they presented themselves, being super cheap, using chips that they're not even supposed to have, which is going to trigger all kinds of other issues. And you've already seen competitive retaliation by Microsoft and the others, basically looking at potentially suing them because they may have piggybacked and infringed on certain rights, in which case, guess what? It may not go to the right place. But I think at the end of the day, the real message in here is that perhaps there are other ways to replicate less efficient AI systems more cheaply. And that may put pressure on NVIDIA down the road. And, Lorianne, you asked about AMD. Well, AMD doesn't have the same hype or the same invested expectations by investors as NVIDIA. So it's priced a little bit more fairly. So it's not going to be suffering from the same types of exposure because they weren't going through a higher valuation metric. So I think we have to wait and see whether DeepSeek is the Sputnik moment, the canary in the coal mine, that a lot of AI can be done significantly cheaper, and which cheaper and with cheaper chips. It is not clear that that is the case at this point. And I think we're going to have to wait until we get some more information from other real competitors, real players in the space, and NVIDIA.
Thank you, David.
I think, I mean, like, to add some color around that, apparently that company bought like 10,000 NVIDIA chips before there was some kind of sanction on the country. It's like, okay, what do you do with those chips? It's like, oh, well, maybe you made part of DeepSeek, just maybe, I don't know. And then I think we also need to consider, like, it's been reported that DeepSeek built itself with $6 million, right? $6 million. Okay. Now
The ChatGPT, which that cost that LLM hundreds of millions of dollars.
And then it was purchased for 10 billion. Like
Yes.
an investment from Microsoft for 10 billion, right? And like how many billions of dollars have been spent on, NVIDIA chips and AMD chips and the billions of dollars that TSM has invested, and you built this for 6 million. I mean, like, my reasonability alarm kind of goes off. It's like, really? I mean, yeah, we know certain countries are efficient, certain people can, have extraordinary amounts of efficiency, but really? So I don't know. I'm a little bit skeptical, in my opinion. But yeah, that's where I kind of stand on that. All right. So, and let us know, Lorianne, if that kind of if that answers your question, just to provide some more context. All right, let's continue on here. All right, so here are revenues above the line, in line, below estimates. So you can see here, this is by sector, guys. And you can see, which sectors are kind of winning and losing here. And yeah, this is like, because you can see here a whole bunch. This is by earnings sector wise. So, communication services, materials, real estate, IT, et cetera, down to utilities. And then this is by revenue in terms of, kind of the winners and losers here. But all in all, I think the stat to take away from this is, one is, are you being exposed to the right industries? And, secondly, of those industries, are you choosing the ones which have the biggest kind of bang for your buck there, right? So information technology, yeah, we do see a whole bunch, like, 90% of them are actually, their earnings are above estimates for Q4 2024, right? So, and I'm going to focus in on that because that's kind of our bread and butter inside the Theta Alpha Fund, right? And the revenues, again, 70% within information technology, which is our kind of bucket here, are their revenues are in line as well, right? So comforting data there, but not like, we kind of know this because, like, when you have a portfolio of like roughly 10, 11 stocks, and you have a certain amount of conviction in or a high level of conviction in those stocks, I should say, it's nice to have this confirmation, but like, a lot of the homework is it's already been done to say, why are we even in the sector, and within the sector, why are we in the stocks that we are in. Again, not a whole lot of surprises here going on. And yeah, this is by revenue, and then this is by earnings. So again, how many earnings surprises? Well, if you go down the list here, only 2.9% of IT companies have quote unquote revenue surprises. Interesting, the revenue surprises, looking at this graph, it's the industry that you probably wouldn't suspect quote unquote surprises to come from, which is financials. Like, people have been lending money for thousands of years. And that's basically what banks do. They lend money, they lend out their balance sheet to make money through spread. That's the easiest explanation. Yeah, they have ancillary businesses, but that is their main business, be it to private individuals, to small businesses or corporations, but that's the business. But interesting to see that they're the surprise there. So interesting information over there. So this week, guys, like, there's a whole bunch of stuff on the radar. We are sitting here Wednesday the 29th. So we got, our holdings include Microsoft, Meta, Tesla. Tomorrow we have a bit of a break here, but again, chock full of earnings, and even on Friday we have a bit of a break. But that doesn't mean that if one of these one of these companies release earnings which are not aligned, you cannot not have a contagion effect. Absolutely, you can, right? And to tell you the truth, like, last couple of
That
weeks,
can happen quite easily, Matthew. Like, for example, let's say, Microsoft, being one of the largest companies in the world, has a bad earnings report. Well, it's going to drag the whole market down with it. It'll just change the sentiment. People will be like, oh, corporate earnings may not be as good. The market may sell off. And this is what Matthew's referring to, a contagion effect. And this is why, earnings season is so important, because you get a good idea as to the health of the economy and to see how profitable these companies are. Are they actually doing well? Are they not doing well? Are they being affected by, high unemployment rates, all that stuff? Do they have nice, exciting products that are coming? Are there going to be meaningful changes in terms of how we live our lives? Are going to make more money, et cetera, et cetera. So there is that contagion effect, guys.
Yeah, and the other thing is, like, we're going off a period of the last couple of weeks. It's been kind of like, you know, it hasn't been all that exciting. We had a president come in and whatnot, and like economic news was a little bit shallow, and now we have like literally like a big bath, to use an accounting term, of like news and potential market catalysts, right? All at once, like this week with like DeepSeek on Monday, a little bit of a, you know, reflection day on Tuesday. Wednesday we have FOMC and half of the magnificent, or almost half the Magnificent Seven earnings, along with you know, Bank of Canada for those who are interested as well. So you know, now we're like kind of chock full with stuff to talk about and stuff to move the market, right? And it looks like it'll be like that for the next week or two, as earnings season progresses, right? So let's see. So again, as per reports, Q4 may potentially show a slowdown in the month in the growth of these magnificent stocks. Yeah, it might, right? For Q3, despite beating expectations on top of the bottom line, Meta, Microsoft, and Apple saw the stock prices fall when other metrics, so soft guidance, disappointed earnings. So like, yeah, we did see a little bit. That's not such a bad explanation there. But again, like I would reiterate that, you know, even though you had a period, and this is where the stock market can be categorized something as fickle, right? Like I wouldn't say that these earnings are bad. Okay, well, are they the best? No, they're not the best. But at the end of the day, in a year's time, this is but one data point. One, right? You can have several others, even inside this next year, right? But the market, it's very short-sighted. It is very fickle. It's a sensitive market, even at the best of times. And yeah, I mean, like, you know, it will reward or punish the stock depending on sentiment, financials, surrounding news, et cetera, right? So again, and quite frankly, the media doesn't really help either, right? Because the media has slants to it. Like Omar and I were watching certain guests on Bloomberg, and it's like, you know, some of them are more animated than others, and like it or not, those people can actually move the market depending on who is watching, right? And I think a very good skill to cultivate in this industry is the ability to kind of you know, cut out the noise, right? And understand that the noise is exactly that, and in 1 year's time, the noise may not matter. Okay, let's continue on here. Yeah, so 4P for the S&P is 22.2, not that, you know, P average is 19.7. You know, it is a little bit higher, but you know, we are hopefully entering a growth cycle as interest rates come down. So again, this is supposed to be a bullish and exciting time. New president, more business-oriented president, rates coming down. You know, you hopefully are seeing that kind of perfect storm for growth emerge. So you know, perhaps these numbers are in line with that thinking. Indeed, like, you know, we are positioned to do kind of I would say, profit from exactly that, right? We want to see a business-friendly leadership in the United States. We want to see lower interest rates that spur on more investment and growth, and hopefully that's exactly what we'll get, right? So as per our fund, and this is a couple of days back, guys, you know, we do see here, you know, top holding Microsoft followed by Tesla, which is kind of an interesting one, actually. Like if you look at the tech world, like Microsoft in itself is this kind of, you know, bellwether, and Tesla is this, you know, almost antithesis of it in terms of the stock volatility. You have like potentially like the calmest CEO juxtaposed with like the most eccentric one, like and Satya Nadella and Elon Musk respectively for these two companies. So yeah, I mean, and I think we're quite comfortable with that kind of polar opposites of leadership in our number one and number two holdings, right? Omar, I know you're the Tesla fan. Anything else you wanted to comment on that?
No, you always you want to go with the you know, the highest conviction companies that you believe in, and go from descending order from there. So you can see clearly, guys, we believe in Microsoft and Tesla very much.
Yeah, absolutely, absolutely. Airbnb, we're continually trying to get, dispose of right now, very small amount. We have a little bit of Bitcoin exposure there. I think that's, we're going to cap ourselves up probably at that 6% level for now.
And we're lucky we had a little bit of low exposure on Nvidia, so we were able to average down while the market was low. And we always have new money coming in, which is another good thing. So we had a big chunk of money come in this week, and we're able to average down on Nvidia and get hopefully up to that 10% allocation.
Yeah. And yeah, that's about it I want to say here. Like, Apple, it'll be coming out as well.
Apple comes out tomorrow.
Yeah, TSM, we continue to monitor TSM. They are like, they are the kind of OEM per se for the chip market. So, we continue to monitor that. So we're quite comfortable with this. We know these stocks pretty well. Daniel, our research analyst, is continually updating us. So, we're comfortable in that regard. We do have some cash that, as almost as this cash coming in all the time, especially during the season, during RSP season, into the account, as this is a registered product or eligible to registered product. So it could be put into RSP or TFSA or RESP, what have you, any registered money within Canada. So, it does give us the ability to continually deploy capital to the options market or the long market, long equities market directly. So yeah, we're happy with that positioning. Again, as of a couple of days back, guys, 30 puts are outstanding right now. 30. That put exposure is about 12% of AUM. We have some covered calls, guys. Again, this is a seasonally strong period of time, and we do have high conviction, so we are going to have covered calls, agreed, but they're never going to be a gigantic part of the market. Timing and managing a solely covered call plan, it's because of a variety of technical reasons, it's not the easiest thing to do. We do a good job of managing it. We do have some rules in place that dictate, like, where and when we're going to do these, overlay that position, but we're quite comfortable with that level. And again, average number of days, this is solely due to the nature of Theta, about 23 days. That's about how far we are looking out. All right. Here's some information. Yeah, we all know this is a long-term product, guys. We all know that this is a growth product. And yes, this is registered account eligible, absolutely. And yeah, if you have more questions about the fund, please give me, Omar, or David a call. What is next? So February is one of the weaker months in the stronger period of time from a seasonality perspective. Now we are writing options out into February as we speak.
So Matthew, from October to May, when we're supposed to have a strong period of time, February is the worst month, correct?
According to the data, yes, right?
Yeah.
Now, according to which data and which set of data, that can be debated a little bit, but generally speaking, that's the case. However, and as the second bullet point says, over the last 10 years, SPV bucked this trend, has proven 6 out of 10 times, right? 6 out of 10 is not a bad stat, right? That's 60% of the time, right? And if you look here, Nasdaq has produced an average gain of 0.5%, positive 53% of the time. This means, it does still give us the ability to be a little bit more aggressive on call writing. This is an alpha portfolio, so we're not, we're not trying to hit like a grand slam every single time, but we're certainly not looking to bunt the ball either, right? So, from that perspective, we can be assertive in our put writing positions. Absolutely. I think the overarching thing is, in addition to, rate cuts in the US and Canada, and we learned this afternoon that, Jerome Powell is quite happy to, stay put for a little bit. Canada, not much so. We have diverging economies at the moment. We'll also be looking at, obviously tariffs as well. Like, we don't know what's going to happen, like, with certainty, like what happens on February 1st, which I believe happens to be a Saturday. Like, I don't think anyone really knows, do they? So again, like, what's going to happen to the cost of produce coming into Canada from the United States? I don't know, right? Cars, I don't know, right? But we will find out soon enough, won't we? Right? So those two things are kind of on the radar as those kind of executive orders materialize into dollars and cents. Yeah, but again, I think notwithstanding any crazy initiatives over there that actually materialize, rates, fundamentals of the companies, those are the things that we continue to look for and we do our professional best to eliminate the noise. All right. Any questions, guys? David, any comments further? This is, we have our
Nope.
contact information over here.
The only thing I
I'm
would
gonna
say
leave the
is,
disclaimer on while David answers the question. You can read our wonderful disclaimer. And David, go ahead, please.
I was just going to say, this year will be an interesting year because we definitely have somebody as president of the United States who certainly has a lot of thoughts about how the world should be organized, but it's not clear that those thoughts will be translated into reality. And so because of that, there is a significant anxiety about what he says, and there's an automatic reaction to it. But I do believe that much of his agenda as proposed will not come to pass to the degree that he thinks. And that includes, I'm going to go out on the limb. I think, yes, we're going to see tariffs, but I don't see it as broad, 25% on everything. I think there'll be carve outs. I can see a step up progress. They need to work their way through it, and there are legitimate things that they can target. But I just think it's going to be a very interesting year. And in that sense, there's probably going to be a little bit more volatility.
Yeah, quite possibly. I mean, and you can see that, David, after COVID, the official COVID, you saw like an increase in VIX, like above that long-term average of 16, and that's kind of hovered there. And to me, that's kind of indicative of what the market is pricing in volatility, and maybe we see that as these initiatives from the White House kind of materialize. So, all right, guys, any questions, comments? Let us know. This is going to be posted to our YouTube website. As a blatant, plug, please like and subscribe and do all the things that people tell you to do while watching videos. Much appreciated. And if there's no